Hey everybody, this is Greg Gossett, and today is Friday, October 21st, 2022, and thank you for coming to another edition of the Weekend Review podcast from Gossett Trading and Mentoring. Hope you had a good week out there. Market finally turned a little bullish. We moved up a little. Seems strange, right? It actually seems strange, but very grateful that it did. I hope you're staying safe out there. I said last week I thought we were in a bottoming process in the market, and I still stand by that. So I have been looking for long positions, and they have been working out pretty well. And so today in the podcast, what we are going to do, the format is, first of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions, both daily swing positions and weekly swing positions, talk about when I bought them, why I bought them, and most importantly, how I am going to manage them going forward. After that, we're going to touch and talk a little bit about trader psychology, always the most important skill in trading, the ability to create a plan and follow it without letting your emotions get amplified and steer you down the wrong path. What is really important is to create that plan, follow that plan, plan your trade your plan your trade, and that's what's important. And where we get in problems is where we get into problem situations is where we start getting ideas in our head about where the market's going instead of just following the price action. I have been trading for almost 28 years now, and I can tell you I have done this for decades. Sometimes I think I'm smarter than the market. I get in there and I go, oh, I think that this and that. And, it just doesn't work. I mean, sometimes it works, obviously, but really what brings home the money in trading is the consistent following of a good, solid trading plan. Doesn't have to be fancy, can be as simple as possible, but what it really comes down to, looking for support, looking for an entry signal, having a good risk to reward ratio, position sizing correctly. If you're wrong, getting out quickly for a small loss. If you're right, having a plan and a process of being able to stick with your trade until something tells you that there's time not to stick with your trade anymore. It's hard. It's fun to take quick profits. And then a lot of times when we have a loss, people always get into this hopeful mindset. Oh, it will turn around. Oh, it's going to come back. And a lot of times it does. But there are some certain times where it doesn't. It really doesn't come back. So what we want to do is we want to be very patient with our winners, and we want to be very impatient with our losers. And unfortunately in trading, and the reason why so many people lose money is they actually do the opposite. They're very patient with their losers, but they're very impatient with their winners. Am I striking a chord with anyone? Does anyone understand this or go, oh yeah, that's right? It's true, everyone. And again, that's why so many people lose money in trading. You have to do the opposite. You have to be very impatient with your losers. You have to be very patient with your winners. So anyway, long way of talking about trader psychology and how important it is. And so we'll touch on that. After that, I have a great trading poem from my I have a great poem from my friend Frank, the trading poet. He's a great author. He's a great journalist. He's a great trader, great musician, great poet, and he always writes a poem every day about the market that's pertinent. I always like to share that with all of you as well. After that, I have gone down through my watch list, both for the daily charts and for the weekly charts for next week. Sometimes there are such great trades on the weeklies, but I'm not able to point those out because I do the podcast on the weekend. So I've kind of changed the format a little bit. So I've gone down through my dailies. I have picked out some potential entries that I'm interested in next week on a daily time frame, and then I'm also going to go down through a list of the weekly time frame candidates that I have, that if they do what they need to do, and I'll point that out, next Friday I'll take the trade. Like today I took a trade on the Qs, as a matter of fact, on the weekly as well. So we'll go through the dailies, the daily candidates, the weekly candidates, and I'll show you what I'm looking for. And that's going to be the show. All right, so let's get started. First of all, I have to run the U.S. legal disclaimer, so hang tough and hang tight, and I'll be back in 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All righty, thanks for sticking through that with me. All right, let's get started on first daily swing trade position I have. Had a great trade here on Carnival Cruise Line, CCL. I did buy Carnival all the way back here on the 11th of October. Reason for buying it was I had just a very simple under 30, over 30 RSI reading entry. I got long at 667. Of course, I have my emergency stop always 2 ATRs below my entry. When I get into the new positions that I've entered, I'll go through the very fine details of that. Orange line up here is my trailing stop level. Once I get up to 1.5 ATRs from my entry, then I go into trailing stop mode. And in addition to that, as the market moves up each day, I do take a percentage of my trade off whenever it moves 0.45 ATRs from the previous day's close. So entered with the under 30, over 30 at 667, had a nice big day up. Few days of consolidations to the downside, few days of consolidation sideways, had another big up bar here. Of course, I took more profits. Did get to my trailing stop level here on the 18th of October. Now, when I get to my trailing stop level, if I get in the future, if I get a close below the previous day's low, I get out of half the position. The next day, it did come down, close below the previous day's low. I got out of half at $7.65 for a 13.0% gain. And then yesterday we were up a little bit, and then Friday we were up again nicely as well. So the remaining position that I have, the second half of the position that I have currently is up 18.73%. So this has been a really, really great trade. Very grateful for that, especially in a market like this. Now that I'm up here like this, look, we are at a 50.51 RSI level. Now, when I take an under 30, over 30, my two rules are, well, once it moves 1.5 ATRs from my entry, if I get a close below the previous day's low, I get out of half. And now we're to 50.51 RSI. Going from a 30 RSI to a 50 RSI, that's kind of the normal move that you could expect. But when you get to that 50 RSI level, you kind of start running into some invisible overhead RSI resistance. Doesn't mean it has to happen, but in my experience, it happens more than it doesn't. So now with Carnival here at a 50.51 RSI, if I close below the 50 RSI, I will get out of the trade because I have a rule. If I get to my trailing stop level and then I have a close below, I get out of half. If I reject the 50 RSI, I get out of half. If I reject the 50 SMA, I get out of half. On an under 30, over 30, if two of those three situations happen, I am completely out of the trade. All right. So I got out of half with the close below the previous day's low. We're at a 50.51. If Monday we go down, close lower under 50, I will get out of the second half. But really great trade here. I felt pretty confident in Carnival when I took this trade. It was a ridiculous move down to kind of ridiculous levels. And I'm glad the market kind of realized that that was too low. So first out of half at a 13.02%, and then the current second half I have up 18.73%. Thank you very much, Carnival. AMD. All right, I did get long AMD back here on the 17th of October. Very simple, under 30, over 30. That's why I took the trade. We also had double bottoms with bullish divergences. That's a contributing factor to why I took the trade. Bought here at 57.71. Of course, I have my emergency stop down here, 2 ATRs below. My end of day stop is a close below the 30 RSI because that's why I took it. Under 30, over 30, take the trade. but in the subsequent days, we did not close below the 30. That's why I'm still in the trade. It was up 1.82% today, which is great. And so far, this particular trade up 1.88%. So going forward here, if I get up to my trailing stop level, then if I get a close below the previous day's low, I'll get out of half. If we reject the 50 RSI, I'll get out of the second half. If we go to the downside and close below 30, of course, I'm going to completely get out of the trade. And if it goes way down and hits my emergency stop, I'm going to get out immediately. And you know, I know there's a lot of rules here that I have. I've spent 28 years coming up with rules. And I do my best in this podcast to, explain what I'm doing, but it's kind of a quick overview because of time. So just wanted everyone to know, and I'll talk about it later in the podcast. But if you are interested in learning exactly how I trade with all the rules, all that kind of stuff, I do teach private one-on-one lessons in the evening time via Skype. It's a great course, and we spend 15 hours, you and I spend 15 hours going over learning everything step by step. So this podcast is kind of briefly go over, show you what I'm doing, but I could imagine some of you are like, wait, what's that rule? And what's this rule? So forth and so on. But I do teach that in my private one-on-one lessons, and I'll touch on that again at the end of the podcast. So anyway, advanced micro devices up 1.88%. Nice V1 as well here. And if you don't know what a V1 or a V2 is, teach it in my class, teach it in my course, and then you can also go to YouTube in the lessons playlist, and there's a great video on using V1 and V2 entries, kind of my bread and butter for my entry signals in trading, and that's totally free. So just check out my YouTube channel, Gossett Trading and Mentoring, and look in the playlist and look for V1s, V2s. All right, so that's AMD. Verizon. Okay, I did take a new trade in Verizon today, Friday, and I'll explain the reasons why. But first of all, I do this every podcast, but I think it's important. You always hear me talk about position sizing based upon the volatility of the market. And honestly, if there was one thing that was the most important in trading to me, it's position size. It really is. Yeah, the setups are important, but if you have a horrible setup with a small position size, you're probably going to be okay, right? But if you have a horrible setup with a huge position size, you're probably not going to be okay. So I really want to get onto this position size. This is what's going to keep you in the game. So brand new trade here, Verizon. Just want to start out. Let's use a hypothetical $50,000 trading account today. Okay, a good rule of thumb is using 1% of your total capital as your maximum allowed loss. Now, you're not going to hit your maximum allowed loss every trade or every loss. About 95% of the time, you're just going to hit your end of day stop, not your emergency stop. But you have to know that if everything goes south and it all hits the fan for you, you have to have a dollar amount that you're willing to lose in the worst case scenario. So let's get back to that $50,000. 1% of that is what? $500. And so and if you have $100,000, 1% of that's $1,000. If you have $25,000, $250 is your maximum allowed loss. It all works the same, but what I use is the 2 ATR. So I take 1% of my total capital, and hypothetically we're using $50,000 times 0.01 is 500. And then I divide that number by the value of the 2 ATRs. And an ATR is average true range. That's the average range of the day based upon the last 20 days. And then 2 times that. So 500 divided by 2.05, 243.9 shares. I would just round that up to 244 shares. Now, if I buy something at 244 shares of something and it moves $2.05 below me, how much is that? It's $1,000, right? Because we just did the math. So that's why I place my emergency stop 2 ATRs below my entry. Now, I took the trade. Oh, well, I haven't really got into that, right? I took the trade because we did an under 30, over 30. Just the same as the Carnival Cruise Line CCL. So we went under 30, over 30. There were no more sellers under the 30 RSI. We're at 32.71 right now. So that was partially one of the reasons I took the trade, the under 30 over 30. In addition to that, we have a beautiful double bottom and bullish divergence. Here's a low here with deep red MACD bars. We rally into some green bars. Now we've come back down. We went even lower, but here you have the red bars below. Here, look, no red bars whatsoever. This is called the double bottom bullish divergence with the missing right shoulder. I learned this from studying with Dr. Alexander Elder, very famous, great trader, great author. And this is a great setup. What this means is the second move down here did not quite have the oomph. It didn't have the selling pressure as this first one. And the implication is that we're running out of sellers. We're running out of selling momentum. That's what MACD is. It's a MACD is a momentum indicator. And so the move down today, look at this big gap here, hoping that this will get filled. So again, under 30 over 30, double bottom bullish divergence. We bounced off of the negative third ATR channel. 92% of prices stopped going down at the negative third ATR channel, move sideways and or move up. 8% of the time they keep going down, so it's definitely a possibility. So that's the setup, everyone. Under 30 over 30, double bottom bullish divergence, rejection of the negative third ATR channel, tons of volume. Emergency stop 2 ATRs below. End of day stop is a close below the 30 RSI. Orange line up here is 1.5 ATRs above my entry. If I get up to there, then I am going to go into trailing stop mode. All right. I know lots of rules, right? But if you want to make it in trading, I really think you have to have rules and follow them. So anyway, this particular trade up a smidge, a few cents. What did I buy it at? 35.28. It's 35.35. So it's up 7 cents, and grateful for that. And we'll see what happens with Verizon. Okay, TLT. Now this is a daily position, a closed daily position. Really good example of why you want to follow your stops. I bought TLT back here on the 10th of October, under 30 over 30, hung in there for a few days, stayed above the 30 RSI, and then I did have to exit here on the 17th when it closed below the 30 RSI. So I got in 99.29, got out 98.10, loss of 1.2%. But then look at the last 4 days. Isn't that the best feeling when you don't like to take the stop, but when you do take the stop and then you actually see the stock go down, you're just like, oh man, am I glad I followed my rules. I mean, if I was living and dying by this stock at 98.10, now it's at 93.17, you know, do I sell it? If I loved it at 98, how do I get out of it at 93? Anyway, it's a 21.47 RSI, massive amounts of volume that came in today. Did have a little bit of a bottoming tail here, but anyway, not in the trade, but did close out this trade for a loss of 1.2%. Okay, those are our dailies. Let's go to weekly trades. And weeklies, I know I like this trade. I did really like this trade on the Russell. On the weekly time frame, I like to day trade. I like to trade the dailies. I like to trade the weeklies. I also like to trade the monthlies. I had dinner last night with a trader, and we were talking about trading monthlies and weeklies and what good setups they are, because if you position size correctly, you're not buying a lot of shares. So you don't, I never care about the weekly or monthly trades. I just don't even really look at them, you know, and on the Russell here, it's worked out really well, but don't forget about weekly and monthly trades. I think they're underrated for sure. So weekly trade on IWM. So this was last Friday, right? The bar closes on Friday, so that's the end of the bar. So I did buy IWM back here on the 14th of October. Why? Well, here's the 300 SMA, weekly SMA. You can see we went under it during the week, closed above it on Friday. Emergency stop 2 ATRs below. If I have my end of week stop on this, would just simply be a close below the 300. See, I identify the support, which is the 300 SMA. I position size, emergency stop, trailing stop level. If I get a close below here, I get out, hopefully with a small loss. If it comes down all the way down to here, you might think, man, you're going to lose a ton if it gets down there. No, I'm still going to lose that hypothetical $1,000 because I take the $1,000 divided by the value of the 2 ATR. Not a lot of shares, but if it goes from here down to the 2 ATR, then I lose $1,000. So don't let the weeklies and monthlies scare you like you're going to lose all this money, because if you do the calculations correctly, you do the math correctly by taking your maximum allowed loss dividing by the 2 ATR value on that particular time frame, it's all the same. That's one of the most beautiful things about using that for using the 2 ATR for your position size. And it also factors in volatility. So anyway, up here was the 1.5 trailing stop level from entry. So today's Friday, 1 week into the trade, and so far this particular trade up 3.15%. Very grateful for that. And then lastly, here we go. I bought the Qs today. Why did I buy them? This is on the weekly. Very, very simple. Close under the 200-day moving average, close back over. This is a great example of support being losing support, gaining the support back above. In addition to that, we have a double bottom bullish divergence, which we've had a lot of them. Here's the previous lows. Deep red MACD bars, or in other words, strong momentum to the downside. We rally into some green, and now we come lower than this previous low. But you see how these red bars are not as deep as these red bars? Again, showing a lack of momentum to the downside, or drying up. So close under, close over the 200-day moving average. And let's actually do the math on this one just for an example, because this is a weekly bar. So, all right, that hypothetical $50,000, 1% of that's how much? 500. Take 500, divide it by the value of the 2 ATR on the weekly, which is much higher, 3630, which is going to have you purchase fewer shares, right? So 500 divided by 3630. Telling me to buy 13.7 shares. Okay, I buy 14 shares, right? Because I round up. If 14 shares moves $36.3 down to emergency stop, how much do I lose? The $500, right? That's my emergency stop. Where's my end of week stop on this trade? Just to close below the 200-day moving average. That's it. No biggie. No sweat, right? Even no sweat if it gets down to my emergency stop loss, because I have to decide in my head, all right, that amount I'm okay with percentage-wise in my account. That's very small. It's not going to wreck my account. It's not going to send me up to my roof to jump off of it, right? Trading is a long-term thing. I'll tell you, there's some days where you feel like, life or death every single day, but it's just not the way to have a long-term trading career. You don't want to just, having to walk the plank every day to see whether or not you're going to make it or not. Just take each trade, one trade. Each trade is just one trade of the next 1,000 trades. You don't have to put your heart and soul into everyone and into every trade and, stay up clutching your pearls about it. It's just like a casino, right? They deal millions of hands of blackjack. They throw millions of dice. They roll the roulette ball, right? They don't care about one particular bet. They just know over time they're going to win. They don't win every single time. So that's the setup on the Qs. Very simply, if it closes below the 200 next Friday, I will get out. If it gets to my emergency stop loss between now and next Friday, I'll get out from my maximum allowed loss. My 1.5 ATR trailing stop level is above here. If it gets there, then I go into trailing stop mode. So this one I bought at 275.10. It's 275.43. So not too bad. Not too bad. So just a quick recap. CCL, first half off at 13.02% gain. Second half, 18.7% gain. AMD is currently up 1.6 on the daily. Verizon, right about even. Actually up just a little bit on the new trade that I took today. TLT, I did lock in a 1.20% loss. IWM up 3.15%, and then the Qs right about break even. Just bought those today. Okay. Let's do a little trader psychology. I really like this, and if you really think about it, whether it's trading or anything else, you'll understand that this concept is true. This is from Tony Robbins, the great Tony Robbins. I'm sure everyone's familiar with Tony Robbins. A negative attitude wipes out self-discipline. Think about that. If you have a negative attitude towards something, going on a hike or doing a job, if you have a negative attitude about it, your self-discipline is not going to be very high, right? You're like, oh God, I don't want to do this. And, oh, I told you, and da-da-da. And then you just get in this bad, negative psychological feedback loop, right? And what's the most important part of trading? Let's get back to trading. Well, it's discipline, right? It's discipline. It's following your plan with discipline. But if you have a negative attitude towards trading, if you're in a bad drawdown, it's easy to get a negative attitude, and your discipline goes out the window, right? Discipline in your plan and your process is all you have in trading. So it's extremely important, even if you're not feeling great about what's going on, to have a positive attitude. Now listen, I am guilty of this more than all of you put together. You know, I get on the podcast here and I try to go over, proper things to do. And I do them most of the time, but a lot of the time I don't. I just have to admit, lots of times I don't. Most of the time I do, but sometimes I do not. I yell and scream obscenities. My poor trading partner has to deal with me every day. Oh man, we should have a YouTube video of me trading during the day. It would be X-rated for sure. But I think it would be kind of funny. I think I would look at it and watch it in horror. But what I'm getting to is try to keep a good, positive attitude regardless of what's going on. Because like Tony Robbins says here, a negative attitude wipes out self-discipline in trading. And if your self-discipline is gone, you have nothing left. So, act as if, fake it till you make it. If you're doing poorly, at least try to keep positive, because if you're positive, it will improve your self-discipline. So anyway, I hope this makes sense. Thank you, Tony Robbins. Appreciate that. But try to keep a positive attitude even when things are going against you, because at the very least, the positive attitude will help you with your self-discipline, and the self-discipline is going to help your trading. All right. Lastly, let's get over here to Frank's poem. This is Frank. You can follow him on Twitter at FrankOD. Today's market poem: Tina has gone and FOMO has left. What's Tina? There is an acronym for there is no alternative. So, when interest rates were so low, there was really no alternative than investing in the market or real estate. Well, now that interest rates are higher, that's not the case. Put your money in bonds, 2-year treasuries, whatever, 10 years, and get 4%. Not really too bad. So there is an alternative. So that's what Frank is talking about with Tina. Tina, there is no alternative, has gone. That affects the market. And FOMO has left. What's FOMO? Fear of missing out, right? Fear of missing out. Tina has gone and FOMO has left. Interest rate headwinds make stocks feel bereft. Good word. Traders are visitors. We are the market's guest. We follow the money, but it's not a contest. Isn't that great? One more time. Tina has gone and FOMO has left. Interest rate headwinds make stocks feel bereft. Traders are visitors. We are the market's guest. We follow the money, but it's not a contest. Isn't that great? Thank you so much, Frank. Please follow Frank and subscribe to Frank over at FrankOD over on the Twitter. All right. Like I said at the beginning of the podcast, I have gone down through my watch list and looking for potential setups for myself for next week, both on the daily and the weekly. Friday is the day that I make my weekly trade setup. So when I go through the weeklies, I'll explain what I'm looking for, but it has to happen next Friday. Really nothing now. I have to wait till Friday for a weekly trade. All right, let's get started on the dailies. Here's Beyond Meat. Well, Beyond Meat, my gosh, I remember when this was like $100 or something. Oh, $236. Now it's a $12 stock. Oh my gosh. Well, is there any potential for this? There could be. There definitely could be, but only if I get the proper signal. Okay, right now we're at a 29.88 RSI. So I can't get into this until we close above the 30 RSI, but if we close above the 30 RSI, I'll buy it. Now, I don't just take any under 30 over 30s, but I really like big picture what's going on here. Look, we have bottom here. Actually, we have bottoms here with deep red MACD bars. Okay, that means there's a lot of selling momentum. We rallied, came back, went lower, double bottom bullish divergence, and a missing right shoulder because we don't have any red. And then we rallied again, and now we came back and we tested that low again today, but still have positive green bars here. We also have an RSI divergence. Look, here we have a low. See how low the RSIs are? Here we have a low here. RSI is not as low. So we have, this is building a base. I think that the downside on this is pretty limited. And I think there is a good potential in here for a trade, but I first need the signal. But big picture, double bottom, triple bottom, actually. Triple bottom with MACD positive divergence, RSI divergences, ATR divergences. Look, here we're low. We're almost to the fifth ATR channel. Now we're way lower than that, and we're only to the second ATR channel. That's a triple confluence of divergences. MACD divergence, ATR divergences, RSI divergences, and that's what we had a lot with some of the stock trades that I took last week as well, and the market in general. And so they are important indicators to me. And so next week, I am willing to stick my toe in and buy Beyond Meat. I don't think it's going back up to $200, but hey, it might go back to 16 or 18. I think it's a decent big picture setup here. All I'd be looking for is a close back above the 30 RSI. That's what I'm looking for next week on Beyond Meat. JO is coffee. Well, let's look at coffee. We're at a 27.67 RSI. So underneath the 30 RSI, we need to close above the 30 RSI. I like to look at the larger time frames for some confirmation for my daily trade. So if I'm on the daily, I like to look at the weekly and go, okay, weekly, am I finding any support on the weekly? Well, yeah, look. Here's the 100-week moving average. See how we went down below it, closed back above it? That's why I like to use a longer time frame to support my daily trade. So yes, on the weekly, we are at support of the 100. On the daily, I still need the signal, close above the 30 RSI. Microsoft, well, I actually got a chuckle when I was looking at this because like, wow, this hasn't happened for a while. We have the potential for a 520 crossover. Last couple of years, we had lots of crossovers with this big market sell-off. Not a lot of crossovers, so I kind of giggled to myself when I saw this. The 5 EMA is currently under the 20 EMA, but if it closes above that, then that's a legitimate signal that backtests well for Microsoft. And I don't just take any crossover, but what I like about Microsoft is that we have moved sideways. If we move sideways and then get the crossover, in my experience, those are the best trades. So I'm looking next week for Microsoft close with the 5 closing above the 20 EMA. Qs. Okay, well, I took the Qs already today on the weekly, as I pointed out earlier with the close over the 200. But as far as the daily goes, similar to Microsoft, we had the move up off the lows, sideways consolidation. If next week I get a 520 crossover, that would be my signal to buy the Qs. Tesla. Okay. Well, Tesla right now, nothing really that great on Tesla. We had earnings, they gapped down. It is holding this sideways range here. It's 35.74 RSI. So really nothing here. What I just want to point out, next week, if we head down next week and I get another under 30, over 30, and ideally, in addition to that, we would have a rejection of this negative third ATR channel. That would be my signal on Tesla, but that's really it. I need an under 30, over 30. If it just keeps going up, there's nothing there for me. So an under 30, over 30 on Tesla is what I'm looking for. Dollar. Okay, so this is not a potential trade. I highlighted this last week in reference big picture of the market. Now, the dollar has been going up. The stronger the dollar is right now in these market conditions, the more difficult it is for the market to go up. And I highlighted last week that, see this big down bar over here that was on the 28th of September? Big down bar that has some follow through the downside. Well, when you have a big outsized down bar like this, if you rally back to about halfway, that's usually where it fails and comes back down. And you can see it's exactly what happened. Here's the line, rallied here, failed, and I was like, okay, market has potential to bounce, because I'm really looking at the dollar as just a big indicator for the market in general. We got there, came back down. Today, look at this. We opened up higher when the market opened up lower. And where? Right at that halfway mark. So this makes me bullish on stocks right now, because we have not been able to make new highs on the dollar. We have not been able to get above halfway of this bar here. So this is not a trade, but I just had it on here because I wanted to mention everyone and show an example of how this halfway tends to, if you have a big down bar, if a retracement back up to halfway, how it usually fails, comes back down. And it did exactly that. So as long as the dollar keeps moving down here, I expect the market to move up. So I am bullish on the market. I know everyone's bearish. I described this last week when everyone, the news, every news article that you read, I know it because when I speak to people that I know, and they all say the same thing, like they're all reading from a script. Well, the Fed's going to da-da-da, and the interest rate's going to keep going, and oh, it's going to be horrible, and oh, it's going to be a disaster, and it's going to be a mess, and oh, interest rates are going to go to 100%. You know, the market knows all this, everyone. They know it all. There's almost nothing that you can come up with that the market has not already figured out and factored in, unless you have some kind of inside information, right? So the market is a pricing mechanism. It's a discounting mechanism. It discounts the news into the future. All this bad stuff is factored into the price. And then last week we had the CPI report, and we gapped way down and then had this huge reversal. And I told everyone, I was like, this is a short-term low. I don't see how any way this is not a short-term low. Not that we can't go lower, but I am bullish at this point. One, because the market's starting to move up. We have elections coming up. From a seasonality standpoint, we're in the best part of the year, the second part of October, November, December, the strongest parts of the year, and follow the price. The price is starting to move up. All right. So that's good news on the dollar. If we see the dollar rising, that's going to be bad news. But this is, I could short this right here. That's shortable. That's a bullish engulfing bar to the downside of V1, rejecting to the halfway there. So I am bullish. All right. Walmart. Well, Walmart got above the 200-day moving average. Not a lot of stuff above the 200-day. Now, do I want to buy it up here? I don't. But if we do have a pullback next week and we come back and test this 200, either a close under, close back over with a better risk to reward ratio, or just an intraday, I would buy Walmart. We had the big move up today. It's definitely conceivable that we could come back about halfway from a Fibonacci standpoint, retest that 200, maybe give me a little better risk to reward. I could have bought this today, but I bought the Qs because I like the setup better. So I'm just looking for a retracement, retest of the 200 with a better risk to reward ratio. And then lastly, XLRE real estate. Wow, what a move down. Unreal. Look at this relentless move down. Just incredible. Do I want to buy that? Well, look, there's nothing to buy here now. Well, actually, this is a V1 on the daily. I didn't take this because I bought the Qs. But what I'm looking for next week on XLRE, if we move back down, I'm looking to come back down and test the lows. That would be very important. And the reason that it would be important is because this move down here with very deep red MACD bars shows strong momentum to the downside. Then we rallied, we got some green. But if we were to come back down and test this low, we would not even have any red bars. I can just tell from experience. So we'd have a double bottom bullish divergence with the missing right shoulder while MACD was positive. So there is no action to be taken on XLRE for me. If it keeps moving up, great. But what I'm looking for next week, if we come back down, test the low, double bottom bullish divergence, missing right shoulder, and also an under 30 over 30 as the trigger point. That would be great. All right, those are the dailies that I'm looking for next week. Now let's switch to the weeklies if I can find these. All right, here we go on the weeklies. And again, everyone, on the weeklies, this is for next Friday, okay? Excuse me. Here we have gold. Gold's come off the bottoms. We're stuck between the 200-week moving average and the 250-week moving average. So my plan for gold next week, if we come down and retest this 250 with a good risk to reward ratio, I would be a buyer. With the rejection of the 250 below, I would be buyer of the 300 weekly below. I would be a buyer if we also had an under 30 over 30, and I would also be a potential buyer if we move up and close above the 200-day moving average. Alphabet. Well, you can see Alphabet has been able to stay above its 200-week moving average. If we came back down to the 200, rejected it, close under, close over, or intra-week, I would definitely be interested in buying Alphabet. I believe Alphabet has earnings next week. I don't want to hold through earnings, but if they have bad earnings and we move down and test this 200-day moving average and close above it, I would buy there. I would also buy at the 250, and I would also buy at the 300 and or the 30 RSI if they have really bad earnings and it comes back down. So I would love to be able to get into Google. I think it's a great company, very strong. We all use it, but I need the signal first, which would be some kind of rejection of the 200-week moving average, the 30 RSI, the 250, or the 300. That's what I'm looking for on Google. Very similar to Home Depot. Home Depot, I would like to buy at the 200. If we get a rejection of the 200-week moving average, again, this is a weekly trade, that would be my entry point there, or a 30 RSI over here, or a 250, or a 300. All good, strong levels of support if they are rejected. Intel. Well, Intel has just been clobbered. My gosh. Nice little V1 that happened last week that would have been a good trade, up 4.9% this week. Too bad I didn't buy it. We are back above the negative third ATR channel, but I still need the signal. What's the signal? Look, we're 28.28 RSI. If I had a close above the 30, nice gentle close. I usually buy under 30 over 30s. I don't usually chase above 35 because 35 to 50 RSI is kind of the natural move that signal can give you. So I'm not, if it goes from a 28 RSI to a 30 RSI, am I going to buy that? No, because I'm sorry, 28 to a 40 RSI, I'm not going to buy that because 40 to 50 is 10 points. 40 to 30 is 10 points. That's even, right? I'm not getting any odds on my money. I want odds on my money. I want to be able to make 2-3 times more than I am risking. So that's why if I get a close over the 30 RSI, I don't chase it above 35. All right. So hopefully we just have a nice little above 30 RSI, and that would get me into Intel. Intel's been strong. MasterCard on the weekly. Okay, well, we're kind of stuck in purgatory here. We're at the 200 week moving average, 250 below. We're stuck right in the middle. What I would be looking for next week on Microsoft, on MasterCard, excuse me, would be a retest of the 250, a retest of the 30 RSI, a retest of the 300, or if it moves up, a nice little close above the 200. Meta. Well, Meta's been struggling for sure. We right now are at a 3104 RSI. So next week, if we had a under 30, over 30, that would get me interested in Meta, and that's about it. Nike, same thing. We're at 3455 RSI. We've moved down. We've consolidated 3 days, but what I'm looking for on Nike would just be probably the only trade I would be looking for on Nike is if we went down, went under 30, over 30. NVIDIA. Well, look, NVIDIA had a close under the 250, close over the 250, also has a V2 here. This is very bullish. But what I'd be looking for next week on NVIDIA, a close over the 200-week moving average would be one option. Another retest of the 250 would be a second option, and a retest of the 300 and the negative third ATR channel. That would be the juicy one right there. I don't know if we're going to get there. Who knows though? But either way, usually things have to move up or down for me to get interested. If it moves above the 200, I'm interested and closes above the 200. If it retests the 250 and gives me a good risk to reward ratio on the 250, I buy it there. Or like I just said, ideally, this is a nice confluence of indicators here, negative third ATR channel and 300 week moving average. Qs, okay, I already bought that, and you know why. Close under, close back over the 200-day moving average. If next week, if it closes under the 200, I'm just going to get out. If it keeps going up, I will stick with it. But, I put this up here because if it does close under the 200, of course, I have to get out. But if it keeps moving back down, I have the 250-week moving average here for an interesting spot to re-enter. UNG, well. Weekly, look at this. We're at a 36 RSI. We have a nice confluence of moving averages here lining up together. We have the 200-week moving average, the 100-week moving average. Let's look at the monthly. Monthly, look right here holding at the 50-month moving average, so confluence of indicators on higher time frames. So what I would be looking for next week on UNG would be some kind of intra-week rejection of the 200 and close back above. That's what I would be looking for. We're almost there. We bounced right when we bounced. We didn't quite get to 200, but some buyers did come in like they usually do at the 200-day moving average. So UNG next week, just to close under, close back over the 200, or a weekly rejection of the 200. XLU. Well, XLU has had a really tough time of it, interest rate based. Utility stock, let's see, 63.15, this is 63.31. So this was a legitimate entry signal on the weekly here. It closed under the 200, over the 200. If we move back down next week, I really like this spot here, about $60. We have a negative third ATR channel, and we have the 250-week moving average. So a rejection of the 250 down here is really what I'd be looking for. And, like I said at the beginning of the podcast, I know it sounds like if I was sitting back and watching this podcast, I go, all these rules, what's happening? If it does this, then I do that. And if it does that, then I do this. And I have to position size, and I know, right? I mean, that's proper trading. You have to do a lot of things if you want to succeed in this business. So, in this podcast, I do my best to kind of just point out what I'm doing, but it's not a lesson, right? If you really want to learn how I trade, and if you really want me to hold your hand, teach you step by step all 5 of the different trading approaches that I use, I offer that, right? I offer that in the evening time via Skype. I have a 15-hour course, just you and I, 5 sessions. Each session is 3 hours, and when you're done, you're going to know it. I promise you. It's a great course. I've taught people from all over the world. It's extremely important to me that my students succeed because I want them to succeed. It's important. I'm very empathetic. I want to see people succeed, and that's why I teach these courses. Like, it really is why I teach these courses. So if you're interested, my email is in the description of this YouTube video. Just send me an email. Say, Greg, I'm potentially interested in taking your course. I'll reach back out and say, hey, great. Let's set up a Skype call. Skype call is free. I promise you it's not a sales call. I just want to get to know you a little bit. I want to learn more about you and your trading challenges and your goals. And then it's also a great time for you to ask me any specific questions about the course. And when we're done with the call, that's it. I will never contact you. You're going to have to contact me and go, okay, Greg, I thought about it. Yes, I want to take the course. We'll get it scheduled, and you're going to love it. It does cost $1,750, but I promise you it's worth every penny. And the best way to learn anything is one-on-one with an instructor. Number 2, if you like online courses, I have a wonderful online course available at udemy.com. The link's in the description of this video. I teach you the deep dip buy stock trading strategy step by step. Is it as good as the one-on-one course? No, but it's really good. And the price is super affordable. It's between $12 and $15, depending on the day on Udemy. But don't let the low price fool you. There is a ton of content there. 9.5 hours of video, 26 videos total, 15 study guides. The link's in the description. Buy the course. Spend the 12 or 15 bucks. Buy the course. Learn the deep dip buy stock trading strategy. Almost everything I showed you today was deep dip buy strategy, so this is a perfect time. So the link's in the description for the Udemy course. 2 more things. Number 3, if you like this podcast, if you found it helpful, I would really appreciate it if you could hit the thumbs up button. It's a simple thing to do. It just takes 1 second. It's free, and it really helps the channel out. It lets YouTube know that people are watching this. Lets YouTube know that people like it. So with their algorithm, they can get out there and promote it more. And there are a lot of people that could use help with trading. And you know, I've had a lot of good feedback from this podcast, and I really do hope it's helpful for you. But if you wouldn't mind hitting the thumbs up button before you check out, get on with your weekend, I would really appreciate it. And lastly, and the most important of everything, please try to go out and do something nice for someone today. One random act of kindness, if we all did it every day, if every person did one nice thing for another person, can you imagine the difference in this world? So, you know, I read that once. It made a lot of sense to me. And so, you know, I had this little platform, and I just want to help promote that because it's a positive thing. Please go out, try to do something nice for another human being today. And if you could, it would be extra special if you could also go out and do something nice for an animal today. That would be great. Animals love act of kindness. They like attention. I was raised with so many animals. I know this for a fact. And so, you know, humans, we like acts of kindness, and so do animals. So if I just want to leave you off with the most important thing, please try to do one nice thing for another human being today. Please try to do one nice thing for an animal today. It's good karma. It's going to come back and pay you multiples of the effort that you made. And also, and probably more importantly, hopefully one day, if you need it, someone will be there for you to do an act of kindness. So I hope you're staying safe out in this marketplace. I do believe we're in a bottoming process here. Doesn't mean we're going to go straight up. We certainly could come back down, but I do believe that currently right now that things are looking bullish, and you can see that in the price action, but it can change, right? So don't get too confident. Don't get too cocky. Always follow price. So I hope you have a nice weekend. I have a wedding tomorrow. I'm going to a morning wedding. Has anyone ever been to a morning wedding? 10 o'clock? Unbelievable. Had to find some good clothes to wear, and very happy for my friend Miguel and his fiance Wendy, and they're getting married tomorrow. And what a great love story. How they met, how it all worked out. And one day I'll have to tell this story, but amazing man, Miguel, amazing woman, Wendy, and just want to congratulate them on their special day. And I will be there, and looking forward to seeing them tie the knot. Okay, so that's it, everyone. Have a great weekend. We'll see what happens next week. Appreciate you being here. I really do. And on the way out here, I have to run the U.S. legal disclaimer. So thanks again, everyone. And God willing, we'll talk to you next week. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.